Hi everyone, delonewolf here and welcome back to EVE Talk, your weekly look at the market in EVE Online. As always, we start with a bit of news if there is news, and well, this week, pretty cool. The next Alliance tournament, XIX19, has been announced. It's going to take place this summer with like the weekend, a couple of weekends for like the finals and lots of matches. I think broadcast by CCP themselves should be in August, so pretty damn cool. I do feel like we've got an interesting couple of months coming for EVE Online with 20 years of EVE Online. Then we get a summer with the Alliance tournament, and then we get the Fan Fest. Unfortunately, we still don't know a lot about content for the actual game, but let's hope that CCP will basically be able to keep the hype train coming. And then the other news bit that I wanted to quickly highlight here is something happened that I sort of expected. We got a 2-for-1 sale in extractors and injectors, and as well CCP sells an injector that I'm particularly interested in to see how that dynamic is going to work, as CCP basically functions as a bit of a central bank there. It is the daily alpha injector, so it's going to be pretty interesting to see if it has an impact on the market. Before that, we also take a quick look at the new Eden store, take a look at what's happening here. So we have some new starter packs that are up and running: bronze, platinum, gold and silver starter packs for a number of plex. Here we've got no sales or anything like that for the plex transactions, and then well, lots of services actually front and center with skins and things like that down a little bit. And in the services tab, you just have the new services with the starter packs, and that's basically it for the new stuff. No sales here. That does mean that the sales are happening on the website itself, not for plex but for cash, of course. So let's get to it. Here is the market. We are starting with the pilot services coming in at 210. There we go, and as always we start with plex, and then I'll open up the filters here for plex and the pilot services. But we will start with the chart, and you can see here we are basically flat for the entire month of April, just below the 4.5 million average mark. There is of course a little bit of variation, you're never exactly flat, but this to me is another one of these feelings, another one of these weeks where I would say the market is feeling hesitant, not really sure what to do, what to expect with the plex market. So if we look at the actual prices, almost 4.6 million for the sellers, almost 4.4 million for the buyers. I think that's pretty damn close to where we were last week, so not much action here. But then of course, no, we actually will go to the multiple pilot train certificates next. I'm not sure how long we are going to keep this going, and honestly someone asked me, is there like an actual announcement, an article or something like that that can be linked to the announcement that the multiple pilot train certificates are basically legacy items that are now, if you buy a new one, just gets applied straight to your account. And I'm not sure, I haven't found it, which is also why I was speculating that this is strange market action with the volumes going down the drain, and then we get this spike here. But if anyone has it, definitely, you know, or if you know that there is an announcement somewhere on the EVE Online website, you can definitely put that in the comments. But for me, this was also like something that came out of the blue, and just someone commented that basically what's happening here is that this item is dying out, which to me is also pretty interesting. We are talking about the most complex online economy basically in gaming, and to see this aspect is definitely pretty cool as well. So we're gonna keep it in here for a little bit longer. Can definitely be interesting if that price keeps going up, because at the moment sellers are coming in at 2.4 billion and buyers are almost at 2.1 billion for a training certificate. Next up we have the skill extractors that are, well, there's the sale. Volumes doubled and then tripled, almost quadrupled, I would say. Yeah, almost for 2 days ago, I think this is. So down substantially. We were above 500 million for the average price. We are down to 455 million for the sellers, 435 million for the buyers. And definitely, if you have the ISK, something to consider to invest in, although I'm not sure if the skill extractors is the most predictable one, but we'll get there in a moment. Before we do go to that daily alpha injector, we get a couple of others. Here are the large skill injectors, and you can see there is definitely a bit of an impact on a sale this big, 2 for 1, is definitely a big sale, and you can see that we have started to drop off, especially on the minimum prices, but also for the daily averages, where we were basically at the highest point of the year, ticking around 960 million for a large scale injector. We're down to the 945 million for the first seller, but look at those buyers below 900 million. We haven't seen that in a while, if I'm not mistaken. Yeah, those minimum prices, you can see that here for the whole month. We basically just touched it on occasion, but most of the month we spent above that 900 million, and those minimum prices have just dropped below that. Spread, I think, also opening up just a little bit. For the small scale injectors, that should be something similar. Well, actually very surprising, holding super strongly, not crossing the 20-day moving average. Gonna quickly check that that is the case. Yeah, that is definitely the case. You can see that here, daily averages and 5-day moving average crossing the 20-day moving average, and the daily alpha injector stubborn and really doing its own thing here, staying above that 20-day moving average and basically staying flat in a range of 193 million to 180 million. Still a bit of spread here as well that I'm noticing, but it's not super visible on this chart here for the minimum and maximum prices, but definitely a bit of a pushback in the large scale injectors because, of course, of the much cheaper all of a sudden skill extractors. But then the one that I'm personally interested in here are the daily alpha injectors, and I love this chart for, well, basically the pattern that I have been predicting, and that is the need for CCP to intervene in the daily alpha injectors more and more often. And you can see that here are the sales when the volumes pump like this and then the price comes down. That is obviously a sale organized by CCP, and you can see how even before the changes to real life prices and things like that, when we touched 50 million, CCP then decided, yeah, let's actually come in with a sale to make the daily alpha injector doable around 40-45 million, staying below 50. We're very happy. Then, of course, I think this was all tied to the announcement that real life changes were going to prices were going to change, so we bumped up to 70 million. CCP let that go for a little bit, and the market even pushed back on this as well, bringing prices down to 60 million. But then, yeah, 60 million for an alpha player, that's quite a lot of effort on a daily basis. So we come in with a pretty damn big sale. We got 1, 2, 3, 4, 5 months between these two sales. Feels quite nice, right? Almost half a year, bringing the price down to close to 40 million. And then we got a couple of months where we had that 40 to 50 million range nicely under control. But then the market eventually you know, gets the idea to bring the prices back above 50 million. We sustained that for a couple of weeks, and here is CCP sale again, bringing the prices down to 40 million. But you can see how the intervals are becoming shorter, because now we are pretty much 2 months, less than 2 months, I think. That would be 1 month, yeah, pretty much 2 months. So 5 months, 3 months, 2 months, and we bring the prices up towards 60 million again. But here is our CCP central bank coming in, not too hard just yet, 50 million to 44 million. And this is actually an aspect that I did not think of, but it's going to be harder and harder for CCP not only to keep things in check, but also to bring the price back down to, let's say, a 40 million price, because the market is starting to see this pattern as well and understands that this CCP sale is actually a nice jumping point, and you can be reasonably sure that within the next couple of months you're back to a price of 50 to 60 million. You get a nice profit on your hand. As basically through these sales, CCP is creating a predictable pattern, which, as expected as well, is they have to come in more and more often, and also if they want to bring the price back down to a 40 million, right? If they want to keep those daily alpha players at around the 40 million range, then they have to come in with larger and larger sales as well. I love this chart basically for the parallels that we're also potentially seeing between the EVE Online economy and the real life economy. If you follow some of that stuff with QE from the American Central Bank, stuff that's happening with, well, another reserve currency, you know, it's not ISK, it's, of course, it's dollars, and how that is you know, having to deal with how does inflation work, how does disinflation work, how does deflation work, all of that stuff. It's super interesting, although I'm not that big of a specialist. For me, it's really fascinating to see how well QE efforts, for instance, in order to keep everything going for dollars are, you know, more and more often, bigger and bigger crises come back as well. We've got something kind of similar here with CCP having or trying to keep the price of these daily alpha injectors in check. In my opinion, it's a strong anchor for those alpha players. I earn 40 to 50 million on a daily basis, and I can basically push my character to the max. It's a doable amount. It doesn't require them to play the game for 6 hours every day or anything like that. And CCP kind of wants to keep that hook within a doable range. But of course, we're in an open market, and so the vultures around that are going to try to take advantage of this predictable trade, and that's exactly what we're seeing here. Super cool in my book. So we'll see how that evolves, and if CCP can actually push the prices down to a 40 million range. Because as I've said, we are below the 50 for the sellers, that's pretty good, but we're still at 44 million for the buyers, which means that there is this buying pressure, there is this rush that are cheap daily alpha injectors coming back. I want to buy, everyone wants to buy, and so bringing those prices down to 40 million will require a little bit more effort from people here in this sale. It's very, very interesting to me. Next, we have the hypercores, which are also sort of reeling on. I would say it's actually a pretty big sale, right? 2 for 1 for the extractors, 2 for 1 for the daily alpha injectors. And so here we're clearly going down a little bit for the week in the expectation or the usage of the hypercores. 460,000 to 437,000, but definitely a big shock, I would say, in the pilot service. It's gonna be interesting to see again, in my opinion, here as well, how low can we go, how quickly will the prices recover, and how quickly will we start to see the prices be pushed back up as well. So very, very cool, and yeah, definitely very entertaining for me personally to see how all of that stuff is gonna work out. Next up, we have the minerals coming in at 12.10. There we go, and as always we start with titanium. You can see not great news for titanium. The chart is not that great here because of some outliers, but we are clearly starting to push below 4 ISK on the buyer's market at least. So the pressure is on for titanium. Not great. Buyers coming in at 404, so they actually pushed up a little bit here. I think people are sensing that this is a danger, and supplies are probably starting to stall a little bit. Because of that, at 404, we were at 4 ISK last week, but those buyers are really trying to squeeze the suppliers here, bringing prices down to 374. They're nowhere near 4 ISK anymore for titanium, saying that's not worth it, it's just too expensive. And so here you have a very nice battle between sellers and buyers happening in a very common item as well. And at the moment, I would say that buyers are winning out. Pressure is mounting, and anyone that loses its patience is going to start to push up towards that 4 ISK very quickly. Right? If you want to get rid of your trade 4.00 on a sale, you're probably gonna trigger that as well, but the more people do that, and then the pressure comes in at 396, 397, stuff like that, and then we are clearly in danger to move to that new range below 4 ISK, and buyers are pulling down, trying to get that price to actually do that, because once a couple of sellers, I think, come in below 4, then we might just be off to the races. Very cool chart here as well. Let's see if it's uniform across the high-sec minerals. We can see for pyrite, same story. Look at us, the daily averages coming in below the 10 ISK here as well. Sellers still above that, 1017, buyers at 951. Starting within the GDA range, you could say. So 950, definitely trying, but not as successful, I would say, as with titanium. You can clearly see that those minimum prices are bumping into that from time to time, but most people for pyrite are not just straight up selling to a 950. Someone has to come in probably in order to create these types of averages with a 970 and 980, something like that, in order for someone to dump their pyrite. But in titanium, you can clearly see that the successful sales for those minimum prices are starting to get lower and lower below the 10 ISK range. And then Mexalon was definitely losing ground as well. Ooh, big buyer coming in here though, as we approach the 50 to keep us in check here. Very interesting. Definitely a big move here, pushing prices close to 60 ISK again. But you can see that the supplies are just large enough, and there's even probably a decent amount of people that were like, all right, I held off a little bit, let's sell some Mexalon close to 60 ISK, try to get that better price. And very quickly they're bringing the price down to 55.83 with buyers at 53.60. That's still our really narrow spread here, still close to the range, definitely at the lower end of the range here though. So lots of pressure for high-sec minerals, as buyers are, in my opinion, trying to bring the price back down. I don't think that there's necessarily that much of a loss of volume or even needed amounts for high-sec minerals, but there's just this real hard battle between suppliers and buyers. And for me, if I were mining high-sec minerals, I would basically hold off. I have a pretty long horizon when it comes to EVE Online. I understand that's not possible for everyone, but I would basically try to say, nope, titanium, it's gotta be 10 ISK. Buyers, try and force them up there. Pyrite has to be 10 ISK. Try and get those buyers to close that gap even more. Titanium has to be 4 and above. Try and put some pressure there as well as a seller. But of course, it is an open market, so again, everyone can do what they want. Next up, we've got low-sec. Here is the Isogen chart, and that counter to everything that's happening in high-sec is continuing to edge back up towards the 600 ISK range on average. 610 for the sellers, 592 for the buyers. Pretty narrow spread on this one as well. Supply wise, a couple of big sellers trying to cash in above 60 here. 600 here with 60 million units, but it's one, and then we get 24 million units, and then again we got to go all the way down here to a 650 for 180 million units. So in all likeliness, a 600 ISK range is something that in the long term will pretty easily defended by Isogen, but you can clearly tell that the Isogen chart has started to change with a little bit more hesitation, a little bit more back and forth between suppliers and buyers. That's just a new reality as we get closer and closer to a correct price between active supply and active demand, and we the old holders of Isogen start to get exhausted. They start to lower their volumes as well. We get back into a more normal market where lower demand can actually bring prices back down. But that 600, I think, will eventually become pretty baseline for Isogen. And then for the Noxium chart, we basically hesitate, right? We're staying above the 875 on the chart, but we're not moving much. It is 902 for the sellers and 884 for the buyers. You might even see here a little bit of a similar pattern to what's happening in high-sec, with sellers desperately trying to defend that 900 range for Noxium. Buyers not as able as for high-sec minerals to bring that price down. About 15 ISK margin or spread, excuse me, between sellers and buyers is not that much here for Noxium, of course, but that's the difference between high-sec and low-sec. Here the suppliers have a lot more pricing power than in the high-sec minerals, where it's just so ubiquitous. There are so many people supplying stuff that the competition to get rid of your high-sec minerals is a lot higher. And then we move to null-sec, which is far more of a cartel situation, with, well, Zydrine stabilizing at 2000 ISK here, sellers coming in at 2000, buyers at 1900 ISK. So that has lost a little bit of ground over the last month or so, but is still basically around the average price for the year, you could say, and still up 100% from the start of the year. And then we got Megasite, that has basically regained the crown for the Tech 1 related minerals, staying very, very expensive, just below the 3000 ISK mark, 2900 to 2833. So here obviously again full price power for the suppliers, but the big difference I would say is that there is far more organization behind the suppliers for Megasite and for Zydrine, meaning that they sometimes just very quickly and very aggressively set a price. But that can work both ways, because big suppliers can also decide, well, 2000 ISK 3,000 for Zydrine, that's too much. You can see here how they start to come back down to the 2,000, and a bit of pushback probably in the cartel back to 2.5, but no, at the moment cheaper Zydrine is definitely on the menu for us with a, I would say, considering the last half year, pretty reasonable 2000 disc for Zydrine. And then finally we also have Morphite that is staying below 40k, so here as well probably a little bit of oversupply where the sellers would love to bring the price back down to 40k. You can clearly see that what was happening was if too many suppliers did come in, brought the price down to substantially below 40k, then they hold off a little bit, volumes decreasing, prices going back up above 40k, again suppliers coming in a little bit too aggressively, bringing prices down, again touching the 40k, but they're having some real trouble convincing anyone to pay more than 40,000 for Morphite. Just below that for the sellers, 38,500, something like that for the buyers. So pretty narrow spread here, and basically the evolution here is that sellers are not really able to bring the price back above 40k for Morphite, at least at the moment. So in general, you could say a bit of pressure in minerals, and Isotone of course still doing its own little thing because it is that unique in its unique situation. Next up we have the PI market at 21 minutes. Let's take a look at this. And so someone was asking in the comments, I think last week or maybe 2 weeks ago, what's PI bottleneck? Well, it is of course speculation. I don't have all the exact numbers, but I personally do feel that for capital ship construction there is a real problem with getting enough advanced advanced PI materials compared to, for instance, what is needed in the mineral segment of that production, and probably even in the other segment, some of the new items brought in by CCP in order to have some levers to fix production if they need it, to intervene. But let's take a look at that. So here, for instance, are the broadcast notes, and you can clearly see how a year ago we were at around 1.5 million, pretty damn stable around this price range, and then stuff started to change, and right now we are back just below 2.5 million for the sellers, still 2.2 million for the buyers, but clearly on a 1 year basis this is very, very expensive, and demand is super high for advanced PI materials. We lose a little bit of ground for the week, but overall in the last couple of days you can see how the 20-day moving average is continuing to go back up, and the 5-day is already starting to go back up here as well at the tail end. So construction blocks next, easily above 10,000 disc. Of course, I've been playing EVE Online for quite a long time, so I also have some historical references that may be a bias as well, right? But in my historical perspective, when you could get 10,000 disc for a refined PI material, especially some of the common ones like coolants, like construction blocks, that was a good price. And you can clearly see that the last couple of months after CCP basically fixed a couple of bottlenecks in minerals, which they very specifically mentioned that they added some sources for some minerals in order to fix production bottlenecks, that we have basically pushed up to a new range here again, and we're very easily sticking to that. 11,000 for the sellers and above 10,000 disc for the buyers. That is a great price for construction blocks. And then we've got coolants that just now is taking off again and actually making a 1 year high point. We're talking 13,500 disc for the sellers, 12,000 disc for the buyers. Bit of spread opening up here, but this is of course the highest point of the year, so that is also quite normal. But you can see how easily coolants has defended that 10,000 disc range over the last couple of months. So demand for PI is very, very high. Then we got something that's a little bit harder to make. Here is enriched uranium, and here you can see we in fact have a move up to 12,500 disc that is then followed by a move up to 15,000 disc for enriched uranium. Very expensive as well, well above that for the sellers, just below that for the buyers. Look at that narrow spread here for something that's actually like 50% above my historical perspective for a refined PI material. That is very expensive. That's also another show that even during these high prices you get big volumes here, big demand. PI is definitely needed in the economy. Here we got another pretty interesting one in my opinion. Integrity response drones did move up right at the start a year ago as well, but you can clearly see again where we started from. All right, 1.5 million for integrity response drones. We're above 3 million. Here's another big gainer. But you can see how the 2.5 million price point again held up until December, where CCP again fixed that mineral bottleneck for capital production. And then all of a sudden, yeah, we need even more PI, and so we got even higher prices for PI. I definitely think it is speculation on my part. I fully agree with that, but I definitely get the feeling that this is a very limiting factor at the moment in capital production. 3.2 million for the sellers, 3.14 million for the buyers. That's a super narrow spread between sellers and buyer here at basically the highest plateau of the year as well. This is another sign that people are basically desperate for these advanced PI materials. There is this frenzy for them. If you want capital ships, you need this stuff, and it's just not all that available, and they're forced to pay a very high price for them. Mechanical parts then also, well, I did not plan this, but yeah, doing a breakout to a 1-year high point right now. So even all of this, right, starting in December again, you can clearly see that change in the dynamic, where before we at least sometimes had mechanical parts super common, super easy to make on barren planets. They are just basically everywhere. Sometimes at least we managed to get a price below 10,000 disc, but then in December that dynamic changed. Now mechanical parts can easily defend that 10,000 disc range, and right at the tail end again we get another breakout, and we're currently selling at almost 16,000 disc and almost 15,000 disc for the buyers as well. Then we get our miniature electronics, another refined PI material, definitely more complex, harder to produce than for instance coolants. So here we have that same change in dynamic in December. We pushed back a little bit in February, but then we just broke out to 20,000 plus here, and we're still easily in the very expensive range, 19,400 for the sellers. So again, people are sort of desperate for this stuff. Nano factories then losing a little bit of ground, but had that early February spike, 1 million at the start of the year, touched the 2 million. So here I also do think that eventually there will be some response from the player base that decide to bring a little bit more supply in, but this one is still holding at the moment at 1.3 million. Not as big a gainer, it's not uniform across all of them, but definitely again you can see here with a bit of lag in December, the dynamic changed here once another bottleneck was fixed. Organic mortar applicators, same story. There's the first breakout, the new average range 1 million to 1.25 million, and here now we're above the 1.25 million. So after this bump we again move into a different dynamic, 1.3 to 1.2 million for this one. Recursive computing modules, well, this one has the added benefit, if high prices, if you consider high prices to be a benefit, of course, that it's, if I'm not mistaken, needed in the current faction warfare related storyline, and that was actually data mined. So we got this speculative move up to 4 million ISK, but we are clearly again settling at a crazy good price of 2.7 million for our recursive computing models. And you can see how the volumes have completely changed as well. Then we got our robotics that have also done basically here a little bit early, but I think it's again related to what was happening here. So moving to a new range around December, and then here at the tail end we again move to a different dynamic. We're able to go back above 100,000 disc, which again historically for me, for specialized PI material PI materials, has been like, that's a good price, that's a normal price, not to go too crazy above that. And now we are at 115,000 for the sellers, and very importantly 113.7 here for the seller, 113.3 for the buyer. That's as narrow a spread basically as you can make it for an item that is become this expensive. And this again at the top of the chart, we're at the most expensive price for the year, and buyers are just completely desperate. They're like, okay, if that's the price we gotta pay, that's the price we are setting up. Next here we've got the rocket fuels that had a very strong post-December here, went up to 15,000 disc. At the tail end we pushed back down, but again the 10,000 disc is nowhere to be seen. 13.2 to 12.5, very expensive. We'll go a little bit quicker because I think you guys got the message at this point. Self-harmonizing power cores had another crazy spike up to 3.7 million in March, so that's being absorbed, but clearly the new range is above 2.5 million. Smart fab units, this is a little bit different. The reason is because of its very inconsistent volume. So clearly this is not as baseline as, let's say, coolants or something like that, and that also means that its range is quite different, but it also means that any big volume moves can very drastically change the price. And you can see here we went down on the chart to a price below 60,000 disc, and then someone said, yeah, I'm gonna start buying here, and so from below 60k we all of a sudden pushes right back to 100,000 disc, and you can clearly see here that availability is different for this one. So in this very hard PI market with a lot of demand, so very high prices, those that have those those inconsistent volumes that are probably basically less needed in that whole cycle are basically a casualty in it and see very increased volatility. Then we got sterile conduits next. Again, starts at $1 million, actual baseline price well below $1 million, currently going for 1.4. Supercomputers, very expensive as well, well above the 100,000 disc mark. So again here, actually probably a little bit of like maybe prediction stuff like that here in November, but in January the dynamic changed again, completely new price ranges. Synthetic oil, that one is also a little bit of, maybe you could say, an exception, but we'll see. Had a very strong January up to 15,000 disc. We stayed there for a couple of months, and I think that is enough incentive, 50% above a normal price, definitely better than coolants and things like that. So maybe a little bit of a shift in production came in, and you can see that we brought the price down to 10,000 disc, but you can also see right away that the volume response is here, and so we are starting to push back up in the price here as well. We're already back at 11k for the sellers. Synthetic synapses, very expensive at around 130,000. Transcranial microcontrollers actually managed to make its way above 100,000 discs very early on. A little bit of a different situation here because it's tied to implant production, and then there's events that boosted it and things like that, but definitely also quite expensive. And even our water-cooled CPU that was so unpopular and also had pretty inconsistent volumes that its price was below 5,000 discs, so below 50% of what I would historically call a normal price for refined PI material. And can again clearly see how in December things have started to change, and now at the tail end how the minimum prices are starting to move back, and we actually get sales above 10,000 discs on higher volumes for water-cooled CPU. And then finally the wetware mainframes are again pushing that to that new range well above 2.5 at almost 2.8 million for the sellers. So in December, in fact, I just started selling as much PI as I could. I sold too early, I fully admit that, but yeah, the message is still, in my opinion, if you're making PI, if you've got PI, you're sitting on a lot of value. So at the moment I honestly would actually be selling, because in my opinion the reason you get a lot of value is also because you are the next bottleneck in capital ship production, and you are also the most likely target of the nerf bat when CCP, or if CCP decides to intervene here. Next we have the advanced moon materials, 3310. Let's take a look at these, and as always here we go through the list. So here are the carbides, with first of all crystalline carbonite for mostly Galente production, and pretty damn quiet after the December change. If you're wondering for this change, perhaps for some newer people, CCP nerfed the output of moons for moon mining by 25%, with a very specifically stated goal of protecting the value of the advanced moon materials, of the stuff that was being mined there, as a lot of these carbides, for instance, started to drop off below 100 discs. CCP was not too happy with that, and I have to say one of the most successful interventions, because while I thought perhaps we would start to see some real volatility behind something like that, nope, the market basically very quickly adapted to the new situation. You can even see how at the moment I would say supplies I have fully stabilized, and we are in a 125 to 150 range for crystalline carbonite, 135 to 130. For Caldari, it is a little bit different because it is the most popular ship type, if I'm not mistaken, in the game. And so we had that December bump that was actually... Oh, damn, I'm on the wrong one. Here is titanium carbide. There we go. So you can clearly see this one had a little bit more volatility right off the bat, but also pushed back down to a range that was not that much above 100 disc. And this one actually has a dynamic at the moment that it is slowly going up above 150, 160 to 153. I think that is mostly meta related. When it comes to these items, I think the meta is the cause of the differences in the values of these carbides, for instance. A part of it will also be because of the regions in nullsec and things like that, but I think what the Amar one will show is that the meta is very important in that, because let's go to Minmatar next, actually, for Fernite carbide. That was actually one that was basically supported by one ship. It's heavy assault cruiser for the Minmatar class. It was part of the meta for a very long time in the Imperium, and that also meant that it had more volatility, more demand, and all of that good stuff, and thus a better price. And at the moment, I think it basically lost a little bit of that edge. We're down to 122 and 111 for the buyers, so the value here is a little bit less, probably because of what's happening in the ship meta at the moment. Quite a bit of volatility here in December as well, but only able to push to like a 150. Definitely a different range from the Caldari version. And then Amar has actually surprised me for the couple of months here at the start of the year, because I was just consistently pushing up here as well. As you can see, decently good move right off the bat in December, but then we actually started to move up here as well towards 175, 180, something like that. But at the tail end here, we're basically normalizing on this as well. 155 to 151. It's definitely Caldari most expensive, then Amar, then Galente, and finally Minmatar. If we go to the meta materials, let's start with Galente on this one. So here is photonic meta materials. This has surprised me a little bit as well, in that we have actually started to open up the margin a little bit more lately. So this had basically a delayed response to everything that was happening to the baseline materials. I can see that we unfortunately lost a lot of value, went down well below 10,000 disc for photonic metamaterials, for instance 7.5, and even at some low points below 6,250. And then here was the December nerf, moved above 10,000 disc, so I was kind of hoping, yeah, maybe even higher prices and more volatility was possible. But no, we immediately settled back at 10,000 disc, which was nothing all that special. But you can see that we're definitely working on a bit of a bubble here next, and currently we're at 11.5 to less than 10,000 for the buyers. That's what's always had me a little bit worried here. Buyers are not following these sale price moves all that much. Then for Caldari, there we go. This one, same story, right? Moved away from that 10,000 disc range to a range well above that and spiked up to 150. But at the tail end, to my surprise, we actually spiked up to, even on a daily average, to 25,000 discs. So here we do see a little bit more volatility and definitely higher prices. Currently selling for 17,000 disc, 16,000 for the buyers. Definitely a better price than, let's say, half a year ago before December. And then we've got Minmatar, which is here. Plasmonic metamaterials, definitely more hesitation on this one. Was volatile before all of this as well. I'm not sure where the heavy assault cruiser nerf happened. Someone coming by there, but yeah, 10,000, 15k, 10,000, 15k, and then volatility start to drop off towards December as the value of all of this stuff was starting to be lost. And then the December nerf came in, pushed back at 15k, but you can clearly see here that this is not as hot an item as most of the others. And then we've got terahertz metamaterials for Amar, with again a push up right here in December to 15k, able to defend 12.5 to 15,000 pretty easily, and then a surprise push in March up to 20,000 disc, which is being lost partially, but we're still in a pretty high range with 15,750 for the sellers of terahertz meta materials. So I actually had and still have some investments in these metamaterials, as I was hoping for more volatility. But I was surprised by the delay of 3 to 4 months before we actually started to see some real price responses and some sell opportunities. Now there's still a list of other advanced boom materials here as well. Most of these are, I think, in the hesitation pattern. Sometimes they're up, sometimes they're down, so we're not in a uniformly moving market anymore. Fermionic condensates, for instance, bit of volatility here at the tail end, but then easily absorbed, and we are stabilizing at 47,000, something like that for the sellers, 45,000 for the buyers. Definitely a narrow spread here. Then we've got ferrogel, went up to 30k, lost back to 25k, but clearly we are slowly moving again in a new range. So this surprises me a little bit. I thought the market would anticipate all of this stuff, but in December we managed to regain the 25,000 disc range, and we lost a little bit, but now we're actually well above that, 27,000 to 26.5 for the buyers. Really narrow spreads in all of this stuff. Fullerite is currently at around 700 discs, 705 to 682. Not a great spread. Hypersynaptic fibers, definitely doing something different, right? December gained the 6 to 7,000 disc range, sustained that for 1, 2, 3, 4 months, and now at the tail end we actually lost it. We're down to 5.5 and 5.3 for the buyers. Nano transistors doing a little bit better with a slow 1 month move up from 3,000 disc to 3,250, something like that. Phenolic composites are losing a little bit at the moment, so you can see now that the change from CCP, while volatility is not like up across the board, at least what's gone is that just straight up the uniform situation before December here was everything is just constantly losing value. There's too much of the stuff out there. It's just terrible, and everything was doing the exact same thing, getting to 1 year low points here, July, November, stuff like that. And now we actually have a market that is functioning in a different way, with here a clear double top for pressurized oxidizer at around 15,000 disc, went back down to 10,000, and then a little bit of a bump at the tail end here. Reinforced carbon fiber actually holding on really nicely to 13,000 disc for the sellers. And finally ceramic fibers back at 400 disc. Very nice 1 year performance, and at the moment up substantially. So you can see here, in my opinion, CCP has really managed to bring value back into the market, to also make the market far more interesting with, well, depending on the item, some going up, some going down, some moving more sideways. That is far healthier market situation. And on top of that, which is what surprised me, I thought we would see far more volatility, but everything has stabilized pretty nicely. So very successful move, I think, from CCP's perspective on this one. Then we have the Take 2 ships coming in next, 42.15. But first, quick sip of water. There we go, and let's take a look at this as well. So my hope was basically that we would start to eventually see volatility here as well, and unfortunately so far most of these items have started to move into different ranges, and basically have given us like one sell opportunity in the last couple of months. Like here, Basilisk pushed up to 180. That was probably on stuff happening in nullsec, but then we went back down to 130 million for the minimum prices here, and now we are slowly making our way back up. 154 for the sellers and 133 for the buyers. You can see very big difference with the advanced boom materials. Is the big spread that remains. Buyers are not giving up on cheaper Take 2 ships. Next here we've got the Cerberus. Definitely not a lot of volatility, moving higher and higher and higher, but ever so slowly. Currently selling at 167. It's definitely not bad if you bought below 130 million during the times of plenty. Buyers at 153, they have to follow a little bit, but still we are talking 13 plus million. That's almost 10% of a spread between sellers and buyers. That's a pretty healthy spread. That's something that we can work with. Doesn't show desperation from the buyers either. Then here, that's what I would like to see a lot more of, with first a bit of volatility, moving to a new range, and then a real spike up to 250 million. We have absorbed this at the moment. We're down to 180 and 170, but obviously if you bought these below 130 million again down here, I think this was like a crazy good opportunity. And this is actually pretty interesting in my book as well. It's basically right at the nerve. The curse went up to 200 million, so this gave you a little bit of a sell opportunity, but then here that was very nice. That's a big profit margin, which a lot of players obviously took advantage of, as the race back down was very quick. Then we have the damnation. Couple of spikes here with a sell opportunity at 400 million, but now we have stabilized at our new range, which is well above 300, 330 to 300 million, 10% again. So that's all quite okay actually. The Deacon can just basically shrug off two big volume spikes in its new range, 23 to 20, well 24 almost to 20. So not much to say here. Eagle slowly going back down. So for this one, 142 to 131. And that is the real question. Is this the new cheap price for the Eagle? Is this the place to jump in? And then hoping that something happens and can bring us back to 180 or perhaps even higher prices. But that is very difficult to predict at the moment, because we just don't have as much volatility as what I would have liked to see. And then the EOS, of course, very nice double top as well to 400 million. So that was basically your sell opportunity. And at the moment, looks like we are definitely oversupplying. Buyers going down just above 250, so 290 to 255 for the buyers. And this chart to me, right, double top and then complete capitulation back to close to the 250, that is for me a jumping point if you want to risk something. It is of course a EOS command chip, not that much volume a day, so I'd maybe try to pick up one of them now and then hope that we can get in a similar situation as this again. Then we get the Aries, definitely moving back down again after a double top. So here's your sell opportunity, 70 million. So actually a lot of them are showing two of them. And then at the moment though, lots of pressure, 46 million to 42 million. Next year we get the Flycatcher. That one was really a late bloomer, because it still held that very low range and even moved down to 37.5 in February, couple of months after the moon mining nerf. And then here was your sell opportunity, jumps up all of a sudden from 37.5 to well above 60 million, and now we're stabilizing at our new range, which is 53 to 46 million. Then we get the Guardian next, that had that very different as well from a lot of the others. Since December, basically 1 to 3 months straight, or slow and steady I would actually call this, up to a 200 million high point. And then we actually made our way back to 180 as well here. So you can still sell if you bought here at around 100 million with a healthy profit. 80%, definitely not bad at 180. But it is not the Twitch trading, the overhyped, right? We get to that high price and then all of a sudden sellers are desperate, so we push us back down and then we push us back up, which in the EOS here happened a little bit for a while, right? You can see how the max prices touch 450, then the minimum price touches 250, then the max prices touches 450, and then the minimum prices touches 250 again. That is a dream scenario. If you're right on top of this market and you're buying and selling at the same time, you're making huge profits over a very short amount of time. But this is really the exception in the Tech 2 ship market, because most of them, again, here's the Heretic, one price jump up to 62 million, sell here, sellers are starting to come in, and we move back down to that range. That's, well, a decent increase in value compared to a year ago, but not all that dramatic. Hound then, very disappointing. Stealth bombers have always been one of my favorite Tech 2 ships to trade because of their nature, right? They're like a hit or miss weapon system. One good bubble, you lose a whole fleet. You gotta replace it. But they can obviously punch well above their weight, so I was hoping for a lot of volatility here. That just never materialized. Hound 20.5 million to 18 million, not much to say, 10% spread. Here's the Ichthyrsa for the Triglavian perspective, definitely climbing. So if you manage to buy close to 450, you're currently selling at 540. There's definitely some profits in that. But again, be careful, volumes are not that great for the Triglavian ship, so I would never risk more than one. But yeah, a 10-20% move here is a lot of risk, of course. Then we've got the Ishtar that had again sell opportunity here, 190, something like that. And here's the new range, around mostly below 180 million. 181 to 165, bit more spread than usual even. Then we get the Kirin, your one sell opportunity at 30 million, slow and steady back to a 20 million range. Here's the Manticore, yeah, that's very disappointing again for a stealth bomber. Not gonna say much except that we basically just slowly moved into the new range above 20 million, and that's where we're at. Nemesis, same story, slow up towards 20 million. That's where we're at. The Nighthawk, I think that's because of the chart, but you do have low prices at around 250. December nerf, pretty timid response to 300 million range, and here was your one sell opportunity at 350, and we're still there, right? Nighthawk, not bad. 376 for the first seller, 400 million for the next one. So that's definitely, there's not a lot of them. The volumes are not great, of course, but if you still have a cheap Nighthawk, you can take some real profits at the moment. On Neros, lovely double spike to 280. Then back down to 130, and here's our new range. Unfortunately, again for the Oneros, not that great in volumes. Then we get the Purifier, alright, our only stealth bomber that tried, gave us a sell opportunity at 30 million, and now just moves along with all the others just above 20 million. Then here is the Rook, nice little 200 million for February. Honestly, I was like, I'm hoping for something better. You get a second sell opportunity now. We're at 192 million. Honestly, I'm hoping for something better. So it's quite diverse here. Saber was very nice, also very late. So I kept mentioning, yep, Saber's here, 35 million, 35 million. If you haven't jumped in on a Tech 2 trade just yet, these looked really good, and then the war happens, of course. 60 million ISK, there we go. Very nice sell opportunity, but now we're gonna be at around the 40 million range, I think. 43 to 37, exactly 40 million range. So your jumping in at 35 days are over, and we don't know if more volatility can come behind all of this. Scalpel next, definitely here 25 million, but volumes are really bad on this one. We're back at 15 million, but you can see that the spread is basically gone, so not sure if I want to do some trading in this one. Scimitar, yeah, not pretty slow as well in my opinion. We're now at 160 on not that much availability. You could have bought them for 100 million, so there is some profits, but yeah, it's 60%. I'm not sure if I would be content with that. I don't hold a Scimitar. Then we get the Sleipnir, back at the 250 again, right here, 350 million. That's your sell opportunity here. That's like basically, I think, market speculation, but now at the tail end here, yeah, we're above the 250, and that is it. Vagabond also 180, not that bad, of course, 130 to 180, but now slow and steady, and the new range is above 150. And then finally, another Triglavian ship. Here is the Zarmast, moving back up as well here a little bit. If you bought below 400 million over the last 2 months, you're selling at 525. 100 million profit, not bad, but of course you do need a pretty big wallet in order to get in on the Triglavian trades. So Tech 2 ships are very interesting, but unfortunately, again, I was hoping for a lot more sustained volatility, more charts like what we see here for the EOS. That never happened. We basically usually get 1, maybe 2 very pronounced sell opportunities, and then it's slow and steady into the new range, as the nerf from CCP again has been absorbed quite well by the entire Tech 2 economy, the nerf to moon mining. So pretty cool. Lessons learned. I'm still holding on to a lot of my Tech 2 ships. I did sell a couple of them, but we'll see, of course, how that evolves as well. Next, we have the Tech 3 ships coming in at 53.20. And as always, we start here with the destroyers that are not that popular in my book anymore for trading. Although I have to say, the last 2 months here, that's pretty nice. Minimum price here, 45 million, sell at 65, buy at 45, sell at 65. I just don't think you'll very easily trigger a buy order in this range here. You can see how the availability is nothing, 64 to 53 million. So this is basically, in my opinion, trading in a non-meta ship at the moment, and feels very risky. This can also pretty easily be manipulated. Then the Heckgate, very expensive at the moment. Minimum prices drops off from time to time, but honestly it's 59 million for the sellers, 55 million for the buyers, and this is mostly just alright, someone is desperate enough to sell a Heckgate to do one trade out of 100 in a day to one of those buyers. Very difficult to actually be trading in this market, in my opinion. And then the Jackdaw, I think, had a nice spike. Yep, I think this is going to be due to the war. I can definitely see the Jackdaw being part of a fleet, right? It's got, again, shields, nice range as well, missile system, hits at any range, basically within its range. So that one spiked up to 80 million, has been absorbed at this point. And again here, volumes are not that great, spread is not that great, 57 million to 54 million, and availability here is actually quite plentiful. 200 here is just basically an anchor right on top of these prices, and we can probably stay here for quite a while. And then finally, the Zweepel, okay, bit of a surprise, but throughout all of that, those higher prices here, right, the Confessor moves up above 60, the Heckgate touches 60, the Jackdaw has a price spike up to 80 million ISK, and then our poor Zweepel, just nothing. 50 million, that's it. We're stuck here. Not only now in the last couple of days, all of a sudden we are moving up on a completely exhausted market basically, and even then, right, there are just no ships, so sellers coming in at 80 million, and then someone jumps in here with a single ship, it's at 52, and it might just even be stuck here because the volumes are absolutely terrible. So I really do feel like the tactical destroyers have basically lost in usage. I think it's mostly a price issue. Because of how low the Tech 2 ships went. All of that is changing, but pretty obviously, while the Tech 2 ships have started to move in those new ranges, so have the, well, what are considered probably the more useful tactical destroyers as well. Confessor is around 60, Heckgate is around 60, and then the Jackdaw 55, something like that, I think, 57ish, yeah, almost getting to the 60 as well, whereas here it was below 50. So while the Tech 2 ships were cheap, so were the destroyers, and I think most of the value, the perceived value, went into the Tech 2 ships at that point, and I think we're basically still in that very same situation. Different story for the cruisers that have a little bit better volatility, definitely better volumes as well, since we no longer lose skill points when a strategic cruiser is blown up. And so here we get a Legion at 200 million, 188 for the buyers. Unfortunately, at the tail end, I have to be honest with this as well, all of this has been closing, so everything has been coming together at the current ranges for a lot of these, but we had a nice tradable spike here for the Legion with jumping points at 180, selling above 200 a couple of times here as well. That was far more tradable in the last 6 months or so. Loki as well, here you can see here a couple of nice sell opportunities with also a couple of very nice jumping points, and even not that long ago we got really close to a 180 and we're already selling at above 200 million again. So I feel like there is more trade potential, more sustained volumes here as well. Then we get the Proteus, the least popular one, but still, right, close to 250 once or twice. And then buying here, 180, 180, 190, 185, something like that here. Same story here again, then went up well above 200 million. We're back down. Let's see where the buyers are at the moment. Below 200 million for the sellers and 186 for the buyers. If you're looking at this full Proteus chart, while we can't do buying below 180 anymore, I don't think that's in the books. We're definitely down at a low point at the moment for the Proteus. And then we've got the Tengu. That was really strong here as well, with the jump up to 230 million in March, and buying here well below 180, 180 again, 180 again. So I feel like the Tech 3 cruisers have some trade potential, and with 100 a day on average, you can probably try to roll with a couple of them rather than just one. So overall, the Tech 3 ship market, it is still tiny, of course, compared to the Tech 2 ship market, but the changes to the cruisers here, with us no longer losing skill points, has definitely, I feel, changed the dynamic in this market for the better as well. And then finally, we've got the extra product for the week, and just something that's been a pretty long time. We're gonna take a look at Tech 2 battleships at 59 minutes. That's been a while. The reason I came up with this because I saw Marquis Dragon fly his Paladin and just blast enemy battleship rats. So that was pretty cool. And yeah, been a while. So advanced battleships. We'll start with the Black Ops. So here is the Redeemer for Amar. Definitely expensive. It is another Tech 2 ship, so you can again see how the nerf to moon mining had its impact. And I think battleships are pretty interesting because they are of course the biggest sink faucet, yeah, sink for all of these goods as well. So they had even a response probably on the announcement here in November, moved from well below $1 billion ISK and then moved up with a high point of 1.5 billion, so pretty damn expensive. And right at the tail end, we do see a little bit of a pullback in the price as we went to 1.25 billion for the last couple of months. Currently, a Redeemer is going for 1.15 billion, buyers at almost 1.1 billion. Then we've got the Widow. That was, I think, a little bit more popular, managed to get close to $1 billion here as well. Took a little bit more time as well, so I think if you are more popular, you got some more volume, so you can weather a storm a little bit better and a little bit longer. But at the tail end here again, we went to 1.25 billion not that long ago, to 1 year high point. But in the last couple of weeks, we are back below $1 billion for the Widow, just above that for the sellers, but 900 million for the buyers, definitely with the spread here. The Galente Sin was going for around 800 million. Then here's the December change, and then at the tail end again, I think you also need PI stuff in these ships, if I'm not mistaken. Correct me if I'm wrong. Oh, actually no, it's Tech 2. So yeah, I think you need now some PI stuff in the baseline of all of this as well. So this one actually just very expensive, in the range close to $1 billion. 1 billion for the sellers, again 900 million for the buyers. And these are the Black Ops battleships. And then finally the Panther looks really cool. Same story here, early April, 1 year high point, well above the 1.1 billion, losing a little bit of ground, but basically nicely expensive. $1 billion ISK for the sellers and $1 billion ISK for the first buyer as well. And then of course that PvE King, which also has its place in PvP. Here is for instance the Paladin, and that is a far more clear-cut chart with very steady volumes. In fact, higher volumes here as well, I think, at the tail end than about a year ago. Yeah, definitely. So going for above $1 billion, and currently going for 1.4 billion for the sellers, 1.3 billion for the buyers. And what you can notice here as well, in my opinion, is that sure, we've got one dip here, so basically one buy opportunity, if you want to call it that, at 1.1 billion. But the volatility in these battleships is nothing like in the smaller ships, and that's also to be expected. Of course, you get lower volumes, you also have far more expensive ships to have to work with, and so these follow basically the general trend in the production cost far more closely than, let's say, stealth bombers, where you can potentially get that big volatility. It didn't happen. It was mostly logistics cruisers that did really nicely on a couple of occasions, and then interdictors as well had a couple of nice spikes. But here you can see that new reality, 40% increased cost, basically almost for the Paladin. Then we've got the Golem, very cool ship as well, far more popular, I think. Again, missiles, drones, and shields, pretty cool. So this one was already worth over $1 billion for most of the year, but then here in December we again got above 1.25. I think because of its volatility, because of its popularity and the amounts, we managed to actually weather that storm quite well. But reality eventually catches up to us. The new costs are what they are. 1.35 billion for the sellers, 1.3 billion for the buyers as well. The Galente Kronos next, very nice, including basically either market speculation on or a little bit of a jump on an announcement here, but below $1 billion for most of the first half of the year, and then things change. 1.2 billion, and even now 1.3 billion in the last month or so. currently almost 1.3 to 1.2 again, far more narrow margin than with the Black Ops battleships. And here then we've got the Vargur that had the December spike up to 1.5 billion. I think that's more PvP related, because the Vargur I think has a bit more place even than some of the others in PvP. Jumped back down to 1.3 billion, but again very, very expensive at the tail end here. 1.4 for the sellers here and 1.3 billion for the buyers. So our Tech 2 battleships are clearly also showing how a nerf to moon mining, to the output there, has its impact throughout the economy. And being the largest Tech 2 ships that you build, I think that they show this in the most the best possible way, without like meta changes and things like that. This is far more slow and steady. And yeah, the Paladin, I think I love this chart the most here. Clearly something changed here, and that is the change to moon mining, making Tech 2 ships more expensive here by 30-40%. Pretty damn expensive at the moment when you get to the battleships, and not as much volatility again as what I would have liked to see, but that's to be expected in these advanced battleships. And that will be it for this EVE Talk, guys. Thank you very much for watching, and as always, I'll see you next time.